Okay, thank you for watching this video, everyone. So we are going to start off new batch for business analyst course shortly for a banking domain. And please do contact to this number if you are interested. And with that being said, today I'm going to lay down some of the key terminologies we use in the banking. And this video will not only helpful for the business analyst, but also for all the software industry who is working for different designations like developer, testing team, DevOps engineer, data analyst, everyone. Because for every software employee, it is essential to have a domain knowledge, and especially for business analyst with the banking domain, there are huge plenty of openings with a huge pay. Companies are ready to pay huge pay for this banking domain knowledge. So today I'm going to lay down some of the key terminologies part of banking domain. So yeah, first of all, we'll start off with the account management. Account management is nothing but it is handles all the details about the customers, whoever is open their account in their bank. Okay, so all the related details like what are the transaction they have done, what are the deposit they have done, what kind of loan say they have availed. So all this will be in central, so that you can so that one can able to easily track about the customers details. So that is called account management. And the next terminology uh, we need to know that loans and lending. So this must be everyone are aware that in the bank many people will be availing the loans like personal loan, home loan, vehicle loan. So these will called loans department. So yeah, the next one we have is EMI. So the abbreviation of EMI is equated monthly installment. So usually it will be uh, customers or persons will be paying in monthly basis. So that is nothing but EMI. So the pay will be paid as per what they have purchased. So if they purchased any home loan, if they are availed for car loan, so upon that they will be paying in a monthly basis. That is called EMI. And then next we have collateral. So in the banking terminology, collateral means the asset, the main asset they were put in the bank to avail the loan. So that is called collateral. So if someone who put the asset for, if someone, if customer puts, if customer puts gold in the bank in order to take the loan as a mortgage. So that is called collateral. Okay, if I put gold in order to take the loan, certain loan from the bank. So instead of calling mortgage, we also call it as collateral. Okay, collateral. Underwriting. Underwriting is nothing but, so in the banking terminology, so they basically rather than calling it as whether you are eligible or not, they use a word called underwriting. Okay, so if someone who was ready to take the loan, so they will check their underwriting. So underwriting means eligibility, like whether they are eligible or not. In banking terminology, they will call it as underwriting. Okay, so they do underwriting for various factors like the employee salary, credit score. Okay, all this will be uh, based on that they will be informing whether they are underwriting or not. And the next we have a LOS. In the abbreviation of LOS is called Origination System. So whenever the customers from the bank, whoever is availing the loans, so this is a software or an application where it will track complete details about the loan of the customers, whoever is handling all the customers from that bank, whoever is availing, whoever is utilized, all those loans details will be tracked over here. That is nothing but loan origination system. Okay, it will record and track each and everything, especially from loan applications, whoever is avail the loans, everything it will be recorded. So that is nothing but loan origination system. And the next one we have is NPA. NPA is nothing but non-performing asset. So after taking the loan, if the customer is not able to repay in the certain deadline, within 90 days, so that is called it as non-performing asset, because customer is not repaid the amount in the certain deadline. So that will falls under non-performing asset. So banking terminology, bank management will use a word called non-performing asset. Okay, if the loan is not able to pay it by the customer within a certain deadline, so that is called non-performing asset. Okay. And the next one we have is payments and transfer. So in the payments and transfer, we all must be well known for, we all are well known for hearing the word called NEFT. So the abbreviation of NEFT is National Electronic Funds and Transfer. So it's basically from one account to another account within few hours, customers can able to send. So that is called NEFT. So we all are quite familiar with this NEFT. Most of the uh, people were using since so many years. And yeah, and then the next one is RTGS. RTGS acronym is real time gross settlement. So when bank wants to send when bank wants to send the amount, when bank wants to send a huge amount at a single shot, okay, at a single shot, that too hefty amount, so they can utilize, they can the bank can bank members can utilize this RTGS, and with that they can able to send to multiple large number of people at a single shot. So the amount will be credited into their account in a one go, in a one attempt. So usually I can take one example, that employee salary. So employees in a one company, employees will be large number of group people, right? Like 1,000, 2,000. So how these people will be credited? How these people will be receive the amount from the bank? Because the bank people will be using this method, RTGS. So from that, uh, bank people will be choosing this real-time gross settlement, and they will pay the salary to the employees in a one go. Everyone will be receiving the salary on that specific. And next we have is IMPS. IMPS means immediate payment service. So likewise, how NEFT works, NEFT, I told you that it is able, a customer can able to transfer the amount from one account to another account within few hours. And we have IMPS also, which is likewise to NEFT, but IMPS, the name itself suggests that immediate payment services. It is an instant payment. So the other recipient can able to receive the payments instantly. So it is 24/7 available, and it's kind of a mobile application. Using mobile application, we can able to use this service and pay the amount instantly. And the next we have is ECS. ECS means electronic clearing service. So meaning that definition, if you see, a system to automatically debit or credit recurring payments like bills, EMIs or salary. So ECS means it's like a kind of SIP. So SIP means we all are familiar, right? So we are setting a specific date. So on that specific date, the amount will be credited or debited. It will usually happen, right? So that mechanism is nothing but ECS, electronic clearing services. So automatically the amount will be either credited or debited. That is called ECS in banking terminology. And the next one we have is trade and treasury management, in which I would like to describe about the LC. The acronym of LC is letter of credit. So here, when two people are having a deal with respect to business, and if they were not meeting, but they want to transfer the amount to each other, but instead of transferring with the suspect, they can approach the banks, and the bank people will be standing as a assurance. So before they standing as assurance, the bank management will give a documentation which contains of a letter of credit, where they will be providing the details about the deal. The bank will be, first of all, the bank will pay the amount, and once they have paid and reach it to the recipient, so the other member, the sender, needs to send it to the bank. Okay, so here first of all, bank is sending the amount to the recipient, I mean dealer. So once the dealer was reached, and once the dealer was checked all the amount properly, the seller will pay the amount to the bank. So the seller is directly in the first attempt not paying to the dealer, because due to some fraud and suspect reasons, they were not paying. They were wanting bank to pay first on behalf of them. So once the settlement is done, the banking the bank team is going the seller is going to pay the bank. Okay, so that is called letter of credit. So for that, anyone, this is normal customers can also avail this kind of service in the bank, letter of credit. And the next one we have bank guarantee. So bank guarantee means nothing but here also this bank people will be promising to pay the receiver if the customer fails to pay or deliver. So here also they will have a documentation or letter issued by a bank, and they will specify instruction that they will be acting as a assurance, like if anything goes wrong, they will be bearing the complete amount on behalf of them, something like that. The process we call it as bank guarantee. So everything LC and BG will be either documented or letter. It will be in the form of either document or letter. Okay, that is called bank guarantee. And the next one we have is foreign exchange. Foreign exchange means everyone are quite familiar. Basically exchanging the currency. Example, when we travel to the America, when we are only having Indian currency, so there we can able to exchange. So instead of calling foreign exchange, we can also call it as forex in shortcut. Okay, forex, foreign exchange, both are similar. And the next one we have is liquidity. Liquidity is nothing but bank bank ensuring the bank has enough cash for operations. Okay, so any bank, like right now we have many popular banks like in India, like SBI, HDFC, okay, and Canara Bank, Kotak Bank. So every bank has to maintain certain amount of money. Okay, because anything goes wrong, the bank needs to uh, able to handle with that money and do things. So that is called liquidity. Liquidity is nothing but keeping a certain amount of money in the bank, okay, as a maintenance. That is called liquidity. And the next we have is Basel or Basel 3. So here also the bank needs to keep the certain amount of money aside, because to overcome the loss, to overcome the loss or risk. Suppose if any risk is occurred, if any risk is occurred or any unevent if any unexpected event was occurred, so the bank needs to have a certain amount to bear that situations. So that is called Basel. Okay, that is called Basel. And next we have KYC. KYC is know your customer. So it's like verifying the customer identity, not only in the bank, everywhere, whether you go for Aadhaar verification or PAN card verification, everyone will call KYC, KYC, KYC. So KYC in the banking terminology, in every terminology, we call it as know your customer. So they will collect your some details about your identity. So that is called KYC. AML. Next one we have is AML. AML stands for anti-money laundering, meaning that illegally doing the transaction. Okay, illegally doing the transaction in order to avoid in order to avoid uh, consequences from the RBI and the government bodies. So that is called anti-money laundering, preventing illegal transaction money. For example, when we will be mainly seeing during the politics. Okay, so politics, during the politics, many politicians will be trying to transfer their money illegally over the car and some other transportation. So that is called anti-money laundering. Okay, in the banking terminology. And the next one we have is reconciliation and processing. Reconciliation means, for example, here if you see, bank check that all transaction in the branch meet the central system. So here reconciliation means they will be cross verifying the data which they were took from the customers versus the one which they are having the application, the central application. So they will be cross verifying whether all the details, all the transaction, all the inputs were meeting the all the inputs were matching or not. They will be doing the comparison. That is called reconciliation. Okay. For example, if the customer was deposited in the bank 1 lakh, the bank manager will be firstly noting down the details, and he will be updating in his system. And the later the main application, the main central software of the main central application, they will be doing cross verification. They will also check in the main central application versus the one who updated the details in their system. So they will be cross verifying, and they will see if the details are matching accordingly or not. That is called reconciliation. Okay, STP. STP means straight through processing. Straight through processing. So here whatever the things that are happening in the automation, that we call it as STP. So uh, for example, we will be setting SIP, right? A specific date. So in the specific date, the mechanism will be happening automatically. Amount will be debiting or crediting on that specific date from your end, from the customer end. No one is going to involve, right? No human intervention is required. All they have set the logic. Okay, automation they have set. So whatever the automation they have set automatically without requiring any human intervention, that is called straight through process. Okay. And we have exception handling. Exception handling means they are also setting the rules, like what should happen if anything goes wrong. Okay, for example, the customers were running out of money, so that means a notification to be triggered to the sorry, customers, regarding that your account is running low. So it's like setting a rules where the customer needs to get trigger and follow that. Okay, that is called exceptional handling. Alert notification, something like that, that we call it exception handling. And we have top up loan. Top up loan is nothing but when a customer was uh, availed on for initially 20 lakhs, but due to some reason he wanted another 5 lakhs. So the customer needs to walk into the bank, and they need to say that, okay, I need top up loan. So top up loan means the banks will be providing additional loan. Okay, additional loan. So instead of saying additional loan, the customer will be saying top up loan. Okay, I need top up loan on my current loan. So if you say that to the customer, sorry, to the bank manager, they will understand. That means the customer is expecting additional loan. Okay, this is what the terminology we use. And the next one we have is overdraft. Overdraft is basically a temporary facility that allows a customer to withdraw more than their account balance. Okay, more than their account balance, meaning that the bank will give you the opportunity certain amount crediting in your account, and the customer can able to withdraw that amount. But whatever the amount they have been utilized and withdrawn from the ATM, they need to pay the interest. Customer needs to pay the interest. For example, customer has 50,000 in his account, but he wants to withdraw 75,000. So here he will request to the bank that I need extra 25,000. The bank managers will be crediting 24,000 plus into the customer account. So totally it will be 75,000. Now customer can able to withdraw 75,000. So for that, whatever the service he was availed, he need to pay the interest for the bank. So that is called overdraft. Okay. So like this, there are so many plenty of banking terminologies and explanation I will be teaching in the business analyst course. If you are interested, please do enroll in our course, which we are going to start. Thank you. Thank you for watching this video. Please do subscribe and like this video. Thank you.